All right, what's going on, everybody? Welcome Friday night stream. We've been doing them for a couple weeks now. I got nothing else to do. It's nice to kind of take my mind off things and pop on here and talk some stuff. Yo, what's up, JC? Everybody who's here, welcome. Whether it's you come every time or you're just coming for the first time, welcome. Usually, how I run these, we go with a little, just a little recap of what happened this week. Then we look into some individual names. And for that, I lean on you guys. Any names that you guys want to see, feel free to just pop in on the sidebar over here and comment them. Also, I'm really close to getting 2,000 live viewers on this thing. So that would be sweet if you guys would share this out so we can crack that number. I think I got like 1,650 or something. So yeah, 1,659 last night. And, ironically, things worked out just how I had forecasted going into today. So, first things first thing that I want to talk about really quickly, and this is beyond the charts, but more of a trading thing. And obviously, if you're listening to me right now on a Friday night at 8:40 p.m., you probably want to get better at trading. And I think this week, something very noteworthy had happened for me. And, exactly. Another Wild Friday night. But this was truly a testament to growth. And it's amazing how I've seen it happen multiple times over the last year or so. And, it's something that in the past it would have eaten me alive. And, I haven't allowed it to happen over the last, some odd months. And it's been great to see. And it's just the growth that I think every trader wants to see in themselves, because in a week like this, where typically I've journaled in the past, and every time we run into a non-farm payroll week, which is this week, this month, it's usually the first Friday. I've noticed, and this is not something that I've discovered myself. It's something that was led on by other people. I've seen it. I tried to fade them and tried to trade it anyways. This week, usually the first week of the month, it's usually a little bit of a difficult week to trade. And the reason for that is leading into non-farm payroll Fridays, typically you will get some, manipulation. Of course, if you don't think the markets are manipulated, I think you got to, take a step back and really think about how these things work. But it's much more manipulated. And if you notice this week, a lot of the moves on the indices were happening prior to market open, right? So when that happens, are there still opportunities to make money? Absolutely. I'm not trying to say that there's not. But the one thing of note is typically, and this happened twice, I believe, this week, where we were already down quite a bit heading into open. And, obviously, when you're down quite a bit going into open, you want to just hop on the train and just, get in for whatever the ride is. But that doesn't necessarily mean that just because we're gapping down on, SPY or SPX, that doesn't immediately mean that we are, you're not going to retrace some, right? So a lot of times people get suckered into that, and that can be dangerous. Oftentimes I like to let the market play out until about 10 o'clock in the morning. And then from there, I like to start my day. And at that point, 2 times this week, it was a little too late for the down moves. And as a result of that, I really didn't take too many trades going into Friday or today. So one thing that I echoed to the group, and again, talking about growth and how, this time 2 years ago, this week would have destroyed me, right? I would have just kept trying to click buttons, click buttons, click buttons. And then eventually I would be cranked, and my big day today would just be all for nothing, just really just trying to fight the uphill battle, right? So I just, echoed this today to the group. But, while some days stink and you're itching to push the buttons, remind yourself it takes one day. I did a whole lot of nothing for almost 2 weeks, and trust me, I was itching because I really wanted to, I wanted to make some money. That's kind of how I eat. So, but to me, this is my growth as a trader. You can't take cookies from an empty box. The setups just they were not there at the specific times that I wanted to play them on Wednesday and Thursday. Right, 2 days that typically are not good days for trading, leading into non-farm payroll. This is something that I've not only have heard it from others, but I've also, journaled it myself. So I would recommend everybody just taking a look and watch price action the 2 days leading up to non-farm payroll. But then I just went on and said, I don't post these often because it's corny. As corny as it sounds, money is secondary. Everyone in the different situation comparing to somebody else is so stupid. Flexing money gains is food or garbage that I think is poisonous to traders trying to find their way, just doing it as a learning moment. And that's just to show that, I didn't do all that much all week, but, you get a day like today and it's just a slam dunk home run. And, you almost forget that, out of the last, 9 trading days, you really didn't do much in about 6 or 7 of them. So it really does make up for it. And, we kind of forget the power of how one day of beautiful price delivery can really set you up going forward. So that was just one quick thing that I wanted to share because, I heard a lot of people this week who were kind of getting put in the blender. And I understand that. It is a difficult week, so I wouldn't beat yourself up too much over it. But this is a learning experience, and I think one thing that is really important is growth and progression as a trader is knowing when and when not to entertain the markets, right? And whether that's you going back and back testing. I think having an economic data calendar is so crucial to anyone who is interested in taking this seriously, because there are really certain days, like if there's no high impact news, let's say on a Tuesday or something like that, typically that's going to be some choppy, you're not going to get too much follow through. And that's something that of course you can back test and look for, right? So everybody always talks about, back testing, practicing, but what, right? So one thing that I would, I did myself, but I would journal how price reacted on specific days. For example, FOMC, typically a day I don't really do all that much until after that 2 o'clock, 2:30 Powell nonsense comes out. Okay, I look for the manipulated move, and then following that, I'll still look for some sort of imbalance. If I don't get it, I don't get it, and I don't trade it. It is what it is, right? Same thing with non-farm payroll. I was ready right at 8:30 this morning to watch what happened, and that was the first trade I took today, and I nailed it, right? If you don't trade futures, obviously you got to wait until the market opens. But realistically, there were multiple opportunities today, this morning specifically, to play that long and do well on it. But other days, really, it's just it's not so much of for example, oh, what did the data that come out? How is the market? Was it good? Was it bad? I think all that is bogus. And here's my explanation for it. At 8:30, when non-farm payrolls data came out, what happened? we immediately went down, right? And then about 10, 15 minutes later, we completely reversed. So what does that mean? Does that mean that at 15 minutes later, everybody changed their mind and thought it was good news and they decided to go long in that situation? That doesn't make any sense. Come on, right? That's why, to me, none of that stuff matters. Knowing the times matter, but the data that actually comes out, I think that it's much more for a longer term outlook rather than what's happening in that immediate day. Um, so of course today we sweep higher time frame liquidity. We get down into a 4 hour bullish imbalance, and we take off a little bit. And just obviously now that we're looking at the NASDAQ chart, I want you to take a look at this because this is pretty important, interesting. If you notice, we completed my model on this last run up. So from this low to here, retracement into discount, bullish imbalance, check, ripper through the highs. Once we take that high, my model is complete. And now I look for a new range to be set, which I think could possibly be right here. But we'll get to that in a second. But look at where we closed this week, right on previous buy side liquidity, right? So isn't that interesting how price ended up retracing back to that exact point? If we look at it on a daily perspective, that low right here is in discount of our current range. And I had this drawn out and everything like that. And to me, this would be favorable. But I do have a I guess a secondary look that we could take a look at today because, as strongly I feel about it, it doesn't necessarily mean that, it's absolutely going to happen. I can give you the secondary point of view in which something, a different scenario could play out. And we'll get to that right now. But again, if you're in here, I would love to crack 2,000. That would be really cool. So if you want to share this room, I'd appreciate that. Casey, I got crushed this week. Yeah, man, it was a wicked week for sure. I mean, today I think was the cleanest price action we've gotten in probably maybe even since before Thanksgiving. I mean, I'm kind of, generalizing here, but since then it really hasn't been all that smooth. I think the first week of December was okay, if I remember correctly. But oh, what's up, KD? Just messed up and cost myself 4 hours of extra work tonight. Yeah, that's not ideal. But all right, so let's get into it here. We'll take a look now. And I just want to run through that little daily idea that I have, because I could totally see two separate scenarios occurring here. So here's the first, and this is the one that I favor in the moment. So if we look at the daily time frame, here's our most recent price run that took out these highs as well as that we referred to earlier. That was the July high over the summer. That was the high previous to us taking it over the last couple of weeks of December. Now, with that being said, we have gotten to, we reached up, gotten to this high right here. Upon this retracement, we have created a bearish imbalance. And from that point, to me, that should have been the green light. And if you go back to the video I did the last stream of 2023, I had made a comment regarding this where I thought price would retrace back down to 50%. So really, I wait for that first imbalance to form in order for me to feel confident that some sort of range has been set, right? Obviously, this happened pretty quick, forming multiple imbalances in the process, but we get into previous buy side, like I showed you guys on the weekly, dip down into this bullish imbalance right here. And to me, this is a pretty solid spot to bounce, right? Now, from this point, where do I think is a very crucial spot? And I think this will dictate really where we go over the next couple of weeks. And if we are to retrace back to this imbalance right here, which I actually favor, it's about 300 points away, a little less actually. This is why I have showtime imbalance here. So to me, I could see two different perspectives happening here, right? If we were to make some sort of imbalance next week and kind of clean up the mess that we formed this week, not only will we not form a weekly bearish imbalance, but we would also get back to what I feel is the drawn liquidity at 17,700, right? That would be that all-time high adjusted for those contract rolls on NASDAQ. So yeah, and then just on the flip side of that, and just to be fair, let me just show you the dollar and what I kind of am forecasting for this as well, because this is very important. If you don't use the dollar, I would totally recommend taking a look at it. To me, it's the best indicator you can get, free as can be. So you'll notice once we got up into this bearish imbalance here on the dollar, we wick in and pull back immediately. It's going to load up in a second. Still no computer. Right now it's in Arizona. It should be here at some point next week. So, but you'll notice right here is our bearish imbalance. Bing, wick up into it. And so far, so good, rejecting, right? Now, here's, to complete my model on a higher time frame, such as the weekly right here, price would retrace back down to 99.81. That would line up pretty well with our all-time highs on NASDAQ, and I think we'd get it at that point. On the flip side of that, we have left equal highs behind here and have not filled this bearish imbalance just yet. So that's just something that I'm keeping on the back burner, right? If we were to get some sort of weekly close above this bearish imbalance right here, wouldn't feel all that great about it. At some point this year, I totally expect these relative equal lows to get swept. Is it now or is it later? I still favor now, but of course I'm treading a little lightly, opening up the year. But that's kind of just what I'm seeing from NASDAQ and DXY. So whether it's something like this, where we completely erase the slip up from this week, head for that high at 17,700, or we get something like this, which I wouldn't really like all that much, but it's possible. So I'll move up into this bearish imbalance, a rejection down from there. And honestly, something like that, because if we were to look back at the weekly, I think at this point we would set a weekly range. Weekly, it would still be a bullish range on the weekly, but here, let me click on over and I'll show you what I'm saying. Because right now on the weekly, we are still in premium, so I don't feel all that great about it. I still favor it knowing what our liquidity, high side liquidity is up here, but once we load up here, I'll show you. But if you notice, our 50% of this most recent run up from late October is 15,755, which is still, 700 points lower. So that's a little bit scary. But anyways, that's just the overall big board. That's my ideas on NASDAQ at least. So we'll hold it there for the indices for now. But let's see. Oh, NEO. Okay, NEO still holding strong on 8 despite the fall across the markets. Okay, so yeah, we can look at NEO. This is one that I do usually look at here. So NEO, we've talked about multiple times. I really would have loved it to just sweep that low at $7 before this run up, but the fact that it didn't leaves me to kind of scratch my chin and question it. But and I'll show you. I have it written down where it says, wish it would have swept this low. Because if it swept that low, it would have swept sell side liquidity. By sweeping sell side liquidity, to me, that would have given me a little bit of a boost, and felt good about us moving higher to, while still a bearish range, at least get us up into this 1160. So here's what I have on NEO just for now. And it's nothing all that crazy. Get up into this bearish imbalance right here, reject, and this week down close into a bullish volume imbalance here. If we were to shrink this range up a little bit, I would have liked to do this even more if we swept liquidity again. So that's why I don't, I'm not something that I would look to trade. But here is your most recent price run to take out these highs in the process. And it's from low to high, retracement into a discount imbalance right here. So really, bulls on NEO, to me, you'd really want to hold this imbalance here. If you lose that, then I think, maybe you come back in here, get a little bit of a bounce, but ultimately I would think $7 is probably the destination for that. So where we currently are at inside this bullish imbalance, and it should look something like that, not what I had before, but that's really where I'm at. And that's why I don't feel all that great about it, right? And that's the beauty of having so many different things that you can trade, right? There's a million different names, right? And if something's not as clear cut and pretty as you would like, guess what? There's probably something else that looks a little bit better. So here's NEO. As we go through, I'm gonna just screen grab these as well, and I'm gonna mark down the timestamps for anybody who might be listening later on, so it's easier for them to cycle through it. but also I'm going to be posting a bunch of charts throughout the weekend. Neo is one that I typically do post, so we're going to screen grab it. Okay. All right. So what else? What else we got? Throw some names out. Thoughts on JPM? All right, let's take a look at JPM. Insane move. Actually completed my model a couple weeks back, but having multiple tickers to trade is opening the toolbox. Yeah, absolutely. I mean, look, I like trading NQ or or SPX. Like those are really the only names that I intraday trade all that much, but I have been swing trading a little bit more than I have in the past. So I am looking at a lot of different names. But yeah, if the setup just isn't clean, or it might not be ready, by you forcing yourself to look at the same name over and over again, it might actually put a little too much pressure on you to trade one specific name, right? So here's JPM. If we take a look here, here's my model from low to high, retracement into your discount bullish imbalance, check, rip to the highs. I should have annotations on this. I might not, but here, hold on. Ready? Okay. What was the start of the price run that took out those highs? And it's right there. Bingo. Retracement into your discount. Ready? Bullish imbalance right here. Let me just come on. Oh, shoot. Okay, so I have the new ones on there as well. All the others just popped up, but here's your bullish imbalance right here. Bingo. Bing. To the highs, model complete. So with my model being complete, that's what my fibs are going to look like now. From low to whatever this high is. The high might not even be formed yet. But check out where we just hit on JPM, which is pretty interesting. We just took out that July or October, October 2021 high, higher time frame liquidity breached. Might not be a terrible time for a pullback. I know banks have earnings next week. Don't know if JPM does specifically, but I also don't trade earnings or anything like that. So and that's actually a pretty interesting look right there. The fact that we did take out higher time frame liquidity. But now look, if next week's candle really is the distinguishing factor for me. So what I mean by that is if next week we are to create an upside imbalance, so an imbalance candle to the upside, that would tell me that we're going to continue. Now, if we're at that all-time high, right, which I think we are, yeah, we are. So if we're at all-time highs, I say this all the time, I'm pretty useless. I don't use fib extensions. I don't feel like they are as reliable. So anything that I don't have information on to the left, I'm kind of useless. So, but we'll see. Sweeping higher time frame liquidity, not a bad time for a retracement. Even this is pretty deep and ugly, but overall in the markets, again, I don't know if we're going to get that deep of a retracement overall. So that's one to take a look at as well. So let's see. We'll screen grab that. So that's a good look. I know banks have earnings next week. I just heard Jim Cramer talking about it on his show. All right. So JPM, what else? We got other names. All right, cool. Yeah, I'm seeing it. Nice. All right, so right here, the car, CLH. I don't understand how a stock with such low volume can move like that. I don't think volume matters at all, but well, I shouldn't say that. I think all of the necessary liquidity is already on the chart. That's my take on it, right? So to me, volume is a byproduct of the liquidity that's already on the chart. And I actually just made a video for the group on liquidity. It's going to be going up tonight, but you'll notice that every time we take out a higher time frame low, miraculously a large volume candle comes out. I wonder why. So let's see. So CLH. All right, this is one that I definitely have never charted, but we can take a look at it. All right, Celsius Holdings. Here we go. Okay, so CLH right here. Okay, so okay, so I'm just first and foremost is how I always start. Just I like to identify higher time frame highs and lows. Those are my buy side, sell side liquidity, right? So already there's, oh, whoops, that would be, come on, give me the dang thing. Oh, maybe I did do a little something on this. Okay. Well, you'll notice here's our low that started our price run to the highs. Let's go back. Yep, this is all-time highs, just confirming. So ready, take a look here. We have a bullish imbalance in discount right here. We have multiple discount bullish imbalances right here. I'll just mark them. I don't really mark those, but when they're below that 79%, just for optics, keep it a little cleaner on the chart. But okay, so here's that. Let's see, we have a level right here. I think we've already tested this one. Yep, we have. Ready? Bink. Take off. Okay. So you might ask right now, why is that your range? So the reason that's my range is, oh crap, let me leave that up there for now. I'll put it back. Okay. So at this point, anytime that we make a high, I'm just waiting. If there's a 50% retracement, then to me the range is set. If there's no 50% retracement, like there's none here this entire time, then I'm chilling, right? Here's our 50% retracement. I actually think this one looks pretty solid right now. Okay, so it's holding here, held on for dear life down here at 50%. This is a bullish order block, down close candle followed by an up close, right? You also had this bullish volume imbalance or gap higher right there. So in reality, this ain't all that bad. Decent look. So the way that I would look at this is, first target would be that 63.03. That's buy side liquidity or internal range liquidity right there. At some point, and maybe it's after the sweep of that high at 68.95, in which we retrace lower, but for now, not all that bad. There is a possibility you sweep that 63, come back down here to deal with some of these inefficiencies, but not bad, not bad, not bad. But yeah, you'll notice every time that we take out some sort of low, it's pretty much followed by a bounce, right? Here, bounce. Okay. So let's, I guess we'll post CLH. Why not? I haven't posted this one ever, but okay. That would be Celsius. All right, cool. So, all right, what's next? What do we got? What do we got? What do we got? Oh, somebody said, I don't get it. Nothing happens when I click this thing. That's weird. I think it works for a lot of people. Okay, so what else we got? We got, Enphase. All right, let's check out Enphase here for day trader. What's up, day trader? And this is at the 28-minute mark. We'll do ENPH. Okay, just marking it for others. So let's come on over here. We'll flick on Enphase. Again, if you're watching, would love to crack 2,000 live views. If you could share the room, that would be appreciated. Also, at any time, if anybody is listening with some questions or input or anything like that, if we would have to schedule for another time, but if you want to pop on here and hop on the call with me, so I'm not talking to myself, feel free to reach out. We'll put something together for sure. So here's Enphase. We recently shifted market structure from bearish to bullish by taking out this high. We shift short-term market structure bullish. Now, once my things load, you're going to notice we have a breaker as well. Low, lower low, break of that. Now we're, look at where we closed. Interesting. Look at that, right at the bullish breaker. So, for this move right here, why we rejected there, 50% of the range, but also bearish volume imbalance right there. So those are annoying, but they happen. So there it is. Your bearish volume imbalance or gap down. Can't get above it on the first attempt. We are now at 50% of our bullish breaker. Also have an inverse imbalance. So previous resistance, flip support. We also have a bullish imbalance right here as well. And you'll notice I have an alert for Enphase crossing 14.99. So yeah. To me at this point, trade goes bad at 95.44. Range is still pretty big. You could trim that even more if you wanted to just go below the current imbalance or the breaker, but not too bad. Let's see if this market structure shift is something that's sustainable that can continue running us higher. Here's one thing I just want to look at because it's actually pretty interesting. I'm just going to pull up another chart layout because I actually have this one saved too. Where is it? So here are just my layouts. Check this yearly on Enphase. Pretty interesting. So if you've been following me for a while, if you've been watching these videos, you'll notice that the recurring theme and even the trades that I posted one today on a live execution. You're going to notice a lot of them look the same. It's the same model that I use, whether it's on a weekly, daily, whatever time frame it is, right? I use the same criteria in order to come to conclusions. So there's my alert on Enphase. But hold on, let me show you something. So that's NVIDIA. Check that. Low, high, retracement into your discount bullish imbalance. Bloop. So far, so good. Okay, now check this. Enphase very similar, but lagging behind quite a bit. So, and that's why I had that alert on Enphase. So ready? So here's my question on Enphase. Do we fill this imbalance, which would be disgusting, prior to making a run back towards highs? Or was this retracement down into discount enough? Look where we bounced on this yearly. This is a yearly chart, but look where we bounced on that yearly chart. Right off 50% of that bullish imbalance right here. And this is back in 2019. Retracement. So to me, my expectation and what would complete my model is 339. This is a 12-month chart. This could take a while, right? This is not a weekly options trade or anything like that. Just something I've been keeping an eye on because, once I saw this over the weekend, I was like, whoa, okay. That's pretty crazy. But yeah, who would have thought Enphase? So that's what I got on Enphase. So let's see what else we got. Keep on shooting those names in for sure. If not, I'm gonna run it up. Okay, we got Apple, BlackRock, fail breakout to me. Okay, we'll take a look at that for sure. Thoughts on C with earnings soon? Yeah, bank earnings this week. I want to get your opinion on BlackRock. Yep, you're next up. Which scenario is stronger, the weekly or daily in your model? You can use it on any time frame. You just have to be understanding. I use it on the smaller time frames. I typically trade off the 5 or the 15. Recently, I've been leaning more on the 15-minute time frame just because I've noticed that the smaller you go, the sloppier it's been for whatever reason. But yeah, it works on anything. Just here's the thing: if we take out internal liquidity, so not a higher time frame swing high or swing low, that's when I would look to play my model. When I don't look to play my model is when we take out higher time frame liquidity. If we take out higher time frame high or low, that's a time where I kind of back off because I know just from back testing, look at charts yourself, right? When you see us take out that higher time frame high or low, typically that can lead to retracements / reversals, and when that happens, my model's not going to work, right? So that's the caveat to my model. If my model worked every single time, we would just go in one direction forever. It would be a market structure shift, retracement into discount, back up to the highs, and that doesn't happen. So, but the highest time frames are usually what I base my general bias off of. So monthly, weekly, daily, and then I crunch down. I look for setups on the hourly. And if the hourly setup checks out, I can go and crunch it down into a smaller time frame like that. I know it seems like a lot, but once you get used to kind of looking in that reverse order, it gets a lot easier. So that was just to answer Shun's question right there. No problem, Vicar. Using your first example, there seems to be a divergence between NASDAQ on the daily reaching discount, but on the weekly not having reached discount. Yeah. and I just go based on the most recent price runs. So that's why I'm a little fuzzy in terms of the daily. Do I think we can bounce back up into that imbalance that I showed you guys before? Yeah, I think that's next stop. From that point, and that's the reason why I wrote showtime imbalance. This is where I think, you know, it gets fuzzy. And at this point, I'm going to be a little bit more neutral. I personally want to see it get up into that 17,700. And from there, it would make a lot of sense for a retracement back to lows, even on that weekly time slot. But um, I wouldn't be surprised at something like that either. And that's why at this point I'll be neutral for the next couple of days. I'll be bullish up into this imbalance here, more specifically, probably around 50%. That'll be the true battleground to me. So that's really where I'm going to be looking moving forward. So let me get back to here. What's up, Stocks After Dark? Man killed it this morning too. What's up, Mustafa? Yeah, do you trade the silver bullet? Yep. So realistically, do I trade outside of that time frame as well? Yeah, sometimes. Like if the criteria lines up with my model and everything like that, for sure. I definitely look for the silver bullet daily, and I'll specifically trade the silver bullet when, for example, we had, price delivery hasn't been all that great. Today was awesome, but prior to today, been a little bit more sloppy, specifically in times outside of that silver bullet range. So really, the times that I've been keying in on over the last couple of weeks have been 10 to 11 and 2 to 3. So that's what I look for in the silver bullet for sure. And then we got upper hand NCLH. Okay, yeah, we'll get to that, but let's just do. We got Apple first with James. So let me just put at 36 minutes in. We're looking at Apple. Now this is also, it's like right now there's a lot of conflicting things, and that's why I'm like, my head's gonna explode. But I'll show you guys, and I'll explain it why, and hopefully you will find common ground, and we can agree on it. But here's Apple, where Apple is retraced to, pretty solid to me, and that's why I still personally favor that move higher. But again, with that showtime imbalance that I showed on the NASDAQ daily, that could be sketchy. But if you look at where we are currently on Apple, we'll load up here. Every time it takes a second to load, I'm going to say, share this. I'm trying to get 2,000 people listening live on a Friday night at 9 o'clock because we're all, nobody's got any fun plans. But yeah, so here's Apple on the weekly. You'll notice low, high, lower low. That's your breaker. This high candle here is your bullish breaker. We swept higher time frame liquidity, turtle soup, completed my model. So this is what my model looked like previously. Ready? What was the start of the price run from here to not there, but here? Bingo. Okay, retracement into discount, check. Bullish imbalance, check. Higher time frame liquidity, check. Take off, complete my model. Done. So from that point, I go from the low that took out the high, right? Low, high. Retracement, we are in discount. We are in a bullish breaker in discount of the range. And that's why, I don't hate it. If Apple were to come back, I mean, this would be catastrophic. I think this would be like seriously scary for the market overall if we were to sweep that low right there. Don't want that to happen, because also, what do you notice over here on the entire build up here on Apple's weekly? No imbalances. Scary. There's not much holding it, right? So yeah, I mean, logically this is a decent spot, but here's the difficult part. There's always there's always got to be something that flicks off in your head that might tell you, this is not as easy, right? It just depends on really how long you're forecasting for this trade, and that's why I found more success with swinging options that are farther out in time. I like to trade 0 DTs when I'm scalping and stuff like that, but if I'm looking at a weekly chart, I'm not going to trade 0 DTs off a weekly chart, right? Because look, in reality, this breaker goes from 181 to 175.80. It's a pretty big range, right? So do we come to 50% like I think and go up from there? I like that. But now we have to contend with this bearish imbalance, this gap down that we had on the weekly could just chop us up, take some time to get through that, right? We could even make that up move, get up into here, retrace, get into whatever imbalance was created on the way up, and then make that move higher. So it's just very time sensitive, and this thing could take a while to play out. So, but overall, you got decent amount of support down here for Apple for sure. So if you hear me say bullish imbalance, I refer to that as a support level, or realistically, I would want it to act as more of like a trampoline. Get into it, get out of it. If you hear me say bearish imbalance, we look at that as a resistance level. So gap down showing the urgency to move lower, and we've moved lower from 192 to 181, right? So bearish imbalance, I would do that as some sort of resistance level. So that's Apple. James, thanks for that one. Okay, so take a look at BlackRock. Okay, we can look at that. Rick says, fail breakout to me. Okay, so let's take a look at BlackRock. I don't even know what this ticker symbol is. If anybody knows, I've definitely never looked at this one and definitely have not charted it. So let's see. How did everybody else do this week, though? Did you find price was difficult to read? Did you find that it was easy to read? I'm curious, because earlier on this week, I didn't, like I said before, I really didn't do all that much. I really haven't been doing all that much. Oh, thank you. Thank you, Katie. BlackRock, yeah, okay. I ain't know. So let's see. BLK is at 41 minutes in. Cool. All right, so let's take a look here and see BlackRock. Okay, so BlackRock. Okay, so ready? Price run that took out this high right here from low to high. Didn't take it out here. Retracement into discount, bullish imbalance. Ready? Whoops, ready? So this is a bullish volume imbalance here and a bullish fair value gap. I'm just going to leave it like that. Bingo. Bounce. Why do we reject here, Mando? Bearish fair value gap right here. Every move can be justified in the chart. I always say this, but it's very true. Ready? So, bing. Retracement back down into here. Body holds. This bullish imbalance right here. Check. Okay. As we continue on, you'll notice. Ready? Bing. Okay. Fill. Good. Retracement. Why do we hold here? Bullish imbalance right here. Bullish gap higher, right? There you go. Next. Bing. Why do we reject there, Mando? What the heck? Okay. Bing. Bearish volume imbalance right there. Okay, let's keep it rolling. Rejection down. Obviously, this is after we cross through. Doesn't matter. Okay, get back down into this imbalance right here. Sweep liquidity, turtle soup, bounce. Why do we reject here, Mando? Bearish imbalance, check. Retrace down. Turtle soup, sweep the low, fill this bullish imbalance right here. Take off, complete my model right up here at 785. So you guys see how you can kind of walk through that whole entire move just by knowing how to plot these imbalances on your chart. Oh, whoops. So there's that. Okay, let me just add this in for now, because obviously with us sweeping the high, what was the price run that started the run to the high? So from this low here to that high there. Okay, let's just map out all these imbalances here. So ready? Bingo. Okay, bing. Okay, so these are your discount bullish imbalances. So, the way that I would trade it, I like when I get these to take them up higher, right? Risk is less, higher reward. But listen, to be fair, you have that bullish imbalance right there. This is toast at this point, and you have two more. You got a ton of imbalances here, actually, on BlackRock. So, ready? One more here. Okay. All right, so you got a ton, right? Not something that I would look to trade personally, but also just worth noting, just like a lot of other names, Look where we closed. Huh. And you don't think this is an algorithm? You think this is random? Come on. It's like the third one I showed you guys tonight. We closed right on previous buy side liquidity. Uh, so I don't think it's all that crazy if we were to bounce here. Just not something that I would look to trade. Look at what your downside risk is, right? From this point, it could still bounce all the way down here at 757, and so you're risking what, like $25 to make what, 19 and 18, 37. I don't know. I don't think the risk reward is great there, but oh, whoops. So here again, let's go bearish imbalance right here. That is a bearish volume imbalance. That would be really our next draw. You could say why we would reject here. Well, not only did we take out liquidity here, but what do we have right here? A bearish order block, and also, just to be fair, you have wick, body, wick. Ta-da! So you can justify it all. There it is. It's beautiful. But yeah, this is just a name. It lines up with a lot of the others. I bet you if we look at the daily on this, it's going to look a lot like what the NASDAQ daily looks like, whereas this is kind of what the weekly on NASDAQ looks like. So we'll get an answer shortly here, but it's just pretty interesting. Pretty interesting to look at. But yeah, let's see. Does previous resistance hold as support? That'll be a good one to look at. So hopefully that was valuable there, Rick. Again, oh, cool. Okay, cool. Oh, sorry, very choppy. Oh, you're talking about price action. I was hoping that it wasn't my connection there. But yeah, I see a lot more comments. Great, we'll get to all of them. Sorry if you just posted down there. I'll circle back to it for sure. I'm just trying to catch up. We got to do C next, so let's do that one. And while we boot this up, because it loves to take a while. This might actually be my last stream with this computer here. So hopefully I get this computer. Currently in Arizona, I've been tracking this sucker every day. All right, so 47 for C. Let me read some more of these comments. James said degens. Lena, yes, or Lena, sorry. PayPal for sure. Peter, you're referring to the price action this week. Very choppy. Yeah, we've been getting pretty big moves overnight in like that London session. Croatian sensation, pretty normal price read on SPY, QQQ, IWM for the way I trade. Today got a little shaky on SPY, but W, nice. Glad you won. I'm pretty much the opposite. Earlier in the week, it was kind of hands off for me, but today was great. Rhett's tough time reading price all week. A lot of time spent watching price grinding. Ended positive though. Awesome, man. That's great. Especially Rhett, I know you've been around the markets for a while, but even if you might not get a good feel on it, and that's okay. I think it just becomes so corny and cliche when people say, "Oh, you should journal. You should do. You should journal. It's important." I actually think it's helpful, but I know a lot of people don't want to do it and journal your trades and everything like that. But I do think it can be used as a very useful tool, specifically. And I think the most important one is see your economic calendar, see what news events are coming out, and comment on what kind of days you get from that, right? You can even have a book and say, okay, non-farm payroll, 1-5, however you felt today. Great day. Watch price from 8 o'clock in the morning until end of day, smooth as can be, respected all my levels, this, that, blah, blah, blah. You can go 1-4, no high impact data, trash day, or, Wednesday, FOMC, really didn't get many setups for me, didn't meet my criteria. And then that way, going into the next time, and everything's kind of laid out for you. And oftentimes these things repeat. You'll notice that too. But again, anything I say, just back test it for yourself. It's important that you do that. That's how you get better independently, you know. Um, oh, what's up, Fatih? How are you? Thanks for joining. Um, Thanks. Good to see your perspective. Yeah, you got it, Rick. I know it really wasn't all that helpful, but just interesting to see where we closed this week. A lot of names are like that. Kyle hopped on late. Thanks for doing Uber for me a couple weeks back. It's been great. Any chance you could peek Logi pullback area? Feels extended. Yeah, I can look at Logi. Starbucks for sure. And then KD said XBI, ABBV, and Starbucks. Yeah, for sure. All right, so let me just do C for Coach over here. All right, so right off the bat, I know I don't have this one charted. Apologies in advance, but okay, we'll cheat a little bit. Bearish imbalance right here. That's a gap down, right? Gap down showing you urgency to go lower. Okay, also within that, you have the next week gave you that bearish fair value gap. So that's where we currently are, right at CE or the midpoint. Yeah, banks don't look as good, man. They've been running for days too. Swept higher time frame liquidity right there. You'll notice, ready? What was the price run that started that we used to take out these highs? Actually, I'm going from the last green candle. That's how I roll. Last green candle. Let's just zoom out a little bit and just see. Okay. So here goes back to that liquidity thing that we were talking about before. Look what happened when we took out that low. Interesting. Look what happened when we took out this low. Interesting. Right? Back test it yourself. It's amazing. But anyways, here you go. Let's see. We have this is a balanced price range or bullish imbalance after the fact. Here's your bullish imbalance here as well. Yeah, I don't know how I feel about banks. I'm glad you guys have brought them up. I meant to look at them, but shoot. Yeah, I don't know how I feel about banks right now. I think it might be time for a little pullback. Here, bang, bang. Okay. So yeah, so that's what we're working with. We got a couple of imbalances up here as well. Here's a bullish volume imbalance. I just don't annotate them because I'm not really all that interested in them. Let's just see one thing. We have a low, high, lower low, and we have this candle here would be, or this high candle would be our bullish breaker right at 50% of the range. Yeah, I don't know exactly what date we have. Let's see if it shows us here, but I don't know exactly what date we have the earnings for Citi. But yeah, I think banks could use a little bit of a breather. That's the way I'm leaning at least. Let's just see something from this most recent high right here. So we had the market structure shift bearish. So we're looking at a much larger range. So we took out that low here with this high, and we go down. And for every green candle we get, do we get a 50% retracement? Nope. 50% retracement? Nope. 50% retracement? Nope. 50% retracement? Nope. 50% retracement? Bang! Check that. Right at 50%. Swept liquidity there. Yeah, I'm thinking we can retrace down into discount of this most recent price run. Yeah, I think banks might be a little extended. And we got earnings next week. And no, I will not ever trade earnings. Let's put it this way. If you think you have a good feel for the markets and you can make some money, you don't need to trade earnings. To me, if you want to gamble on something that you'll enjoy, like sports or something like that. I don't know. I just think because you could be right on earnings, but it could totally just melt your contract with the IV crush, or you can be right. Let's say you're right. You pick the right direction, and by open, you get that deep retracement, and then you just want to get out at that point, and then it rips on your face, and you're really frustrated after the fact. So those are always terrible. But okay, so let's see, what other names do we have up here? So we just did C. Okay, Cool. NCLH is next. Yep. Sorry, I kept you waiting there. Upper hand. Just got a little backlogged, but so we're at 54 minutes in, and we're gonna do NCLH. Again, for anybody who's watching, please share this. I'm trying to get to 2,000 live viewers. That would be awesome. I got close yesterday. I was at 1,650. We got to end the life of my my Mac here on a high note. So let's see. We'll boot up NCLH here, and then we got a couple more. While we wait, okay, Airbnb we got coming. A, B, and B, check. Let's see what else. PayPal, PYPL. Let's scroll. Let's keep scrolling. SBUX. Okay. JPM snipe liquidity. Yes, sir, it did. Oh, cool. Thanks, Katie. Katie's dropping the earnings dates below. So we have Citi the 12th, so a week from today. We have BlackRock a week from today. Oh, wow, they're all Friday. Dang. Really? Shoot. It's crazy. Okay, so let's go over to Norwegian here. And, okay, good. We got Norwegian set. Okay, so, okay, I'm just going to, again, I just like to put these down here. Lots of liquidity down here. Here's another low. Bing. Here's another low here. Bing. Another relative equal lows here. Yeesh. Let's just confirm that. Low 1216. Low 1215. Nope. Swept the low. It's okay. Never mind. Never mind. So we took liquidity on that. Okay, so here's the run up that took out these highs here. What was the start of that price run from our first green candle to our high? Bingo. Okay. Ooh, bearish market structure shift right here. Nope, not great. Now check this. Ready? So if you guys noticed, we swept that low right here. That was the start of that price run. By us taking out that low, that's a failure on our end, right? Failure on our end. And now we have a bearish market structure. So ready? Let's go from that most recent. Boom. Down. Check. Right up into that 79%. Bearish imbalance. Dang, is NCLH about to puke? Check it. This is a bearish order block here. I don't have it. I'm not going to keep this on, but I just want to show you guys where it is. And I make my order blocks purple, but I don't typically have them on the chart just because it gets so clogged and disgusting. Right off 50% of that bearish order block. See that? Can't make it up. So, so currently at 50% in a bullish imbalance, right? Right here. And look where we bounce. Oh man, that's crazy. Look where we bounced. 50%. Check. Okay, so we're right at 50%. Really, I would use that as the line in the sand. 50% of the amount. It's not so much the range, but right here, 1730. So wouldn't want it to sweep this low again. But you could also get a retracement. You have a brand new bearish imbalance right here as well. Ready? Oops. There it is. Brand new. That's showing you urgency to move lower on a gap down. Right? Structure is still bearish. Yeah, not loving NCLH all that much here for upside at least. Previous bearish imbalance right here. Check this. So rejected 1, 2. So far, so good on support. We'll have to see. Not one that I'm very interested in, though. I got to be honest. So hopefully that helped a little bit. COF 125, Goldman Sachs 116. Okay, so yeah, really they start. They basically start next week. All right, so now we are on Airbnb for Psy. All right, Psy, let's do it. Airbnb, ready? ABNB. Okay. Okay. Come on, let's load up, sucker. Here we go. Oh man. Yeah, so I'm gonna have a bunch of charts as well. I usually look at names that you guys don't. Uh, all right, Airbnb is loading up right now. If you guys have any more, feel free to roll them in. But I'm gonna go until we're out of names here. Um, let's see. Okay, so relative equal highs on Airbnb here. I have no idea what that's from. These might be previous dark pool prints actually, but these are irrelevant for right now. Okay, so let's take a look. We have bullish market structure shift with that price run, right? Ready? From low to high, retracement into a discount bullish imbalance. Check. There she blows. We do have relative equal lows there. Note that. Keep that in mind. There's your run up for highs. Okay. So if we were to do our next price run here, let's see what's the lowest on 55.74. We have equal lows 74, 74. So we go from here to that high right here. Bingo. Let me just remove this for now. Okay. There's your retracement into discount bullish imbalance. You got an order block. You also have this right here. Hold on. Whoops. Give me it. Hold on for dear life. And we had one more that we actually, I don't think we got into this one here. Nope. Okay. There's your run for highs, relative equal highs. And we have a bullish imbalance here. Airbnb looks all right. Not half bad. Check that. That's pretty. So really next week, we created this week, which is not ideal right here. That's a bearish imbalance. Not ideal. Here's a bullish imbalance down here. One thing that we should note, and let me just look at this really quickly. I want to go out a little bit farther, see if I can come to anything tighter. We'll go to a daily after this as well. So your monthly is all right still. I would still favor 154.95 before 103.55. I know it's a huge range, but I think I like the upside still on Airbnb. Let's just see. So this is a mitigation block right here, which we've already rejected off of. Yeah, Airbnb ain't that bad. Also dealing with this. Just this is on a monthly perspective as well. So check that. Ready? Oh, come on. What are we doing? Give me the rectangle. Here we go. Let's close this sucker out. Don't need that. And here it is. Ready? Good. So that's where we rejected monthly bearish fair value gap. Retrace discount. Bingo. So far, not bad. Not bad. So yeah, I like I would favor the upside on that, but you noticed that if you were on here a month ago with me, there were a lot more clean cut, beautiful setups, and now it's a lot of names just in limbo, not as clear, not as pure, but that one's one of the better ones, I think. So that's Airbnb. We did that one at about an hour. All right, let's go into PayPal. 104 on PayPal. All right, let's see. And now we're going to be slow motion. Please don't die on me here. Oh, 15 more. All right, I've been joking around. I did 100 likes, and I'll drop the imbalance video that I have for the group. I'll put it public. We're close, but not quite there yet. I just don't want to make stuff and nobody watch it. That's my biggest concern. Always. Don't want to waste my time doing it if no one cares. Okay, so let's see. COF actually looks good for banks, sitting above bullish imbalance and above 6/6/2023 bearish imbalance. Gotcha. Yeah, let's see if this thing wants to work for me here. Let's see. I'll go over here and do PayPal. PYPL. Let's see. Come on, put some pressure on it. Okay, here's PayPal on a daily. Oof. Nasty. Okay, so I don't know when the last time I charted this was, but probably a while ago. Let's see the weekly. I don't think PayPal looks all that great. Oh, but it did. We talked about this yesterday. If you go on yesterday, we said we wanted it to close back inside this previous bearish imbalance. So like your little resistance flip support. That's what we wanted. That's not bad. So really, PayPal gets interesting over 65.58. That's when you shift market structure bullish on this short-term price run. Still currently overall bearish, but if you were to sweep that, you also create a bullish breaker, low, high, lower, low. This would be your breaker candle. So really, for me, maybe I'm a wimp, but I usually like that extra little layer of confidence. So I try not to like long in a bearish setup. But if we were to sweep highs here, that would be a shift on this most recent price run higher. So not too bad. Also worth noting, check this. Bullish imbalance right there that we did holding on for dear life, but not too bad. All right, let's go over here. What else we got? PayPal did the thing. Yeah, I know. PayPal has been one that's just been off limits for a while. So that was PayPal. Thanks for that one, Lena. Let's see. We got a lot of these other banks, but let's look at COF because Katie had mentioned this one. If you guys have any more, put them now or forever hold your peace. We got to do Starbucks too. Capital One. Capital One we're doing at 107. Okay. And we'll do Starbucks next. So I don't know why, but when I do this, it works quicker. It's just every time we hit an hour in the stream, it like almost automatically just decides to slow up. But we won't have to deal with this for much longer. We're getting close. Capital One. It's loaded up now. Oh, wow. Up 2% this week, eh? Huh. Another bank. Ooh. Katie, what was your take on this? Yeah, no, it does look good for banks. So here's why I say that. In comparison to a lot of the others that swept higher time frame liquidity, Capital One actually hasn't yet. So here's that swing high in Capital One right here. Here, let's just get this out because this would be an area where I would look for a retracement. Snap. Hold on. It's coming. Give it to me here. Thank you. Okay. Okay, that's a bearish volume imbalance. Gap down. Okay. Here's actually another bearish. This is a fair value gap right here. Oops. Okay. So we've already filled this one to the upside. Liquidity is at 144.73. Katie, this is a good eye, man. Here's another right here. That's a bullish volume imbalance or gap higher. I'm just going to start labeling these on the way up. Here's a bullish fair value gap. Wick to wick, no wicks on either side of that candle, right? Same thing here. Imbalance to the upside, no wicks on either side of the candle. Same thing here. wick, body, wick. No wicks on either side of the candle. Beautiful. And another one here. Dang, Capital One is strong. So yeah, buy side liquidity rests at 144.73. You recently shifted market structure. So realistically, what I have at this point really is just simply, let's just note this low. And then, is this the high? Who knows? It might not be, but just for now, because I don't know what this high is going to be. The range isn't set. When we get to a 50% retracement, at that point, I'll feel like the range is set and go from there. But yeah, Capital One's solid, KD. So that one throws a wrench in the whole, all the other banks for sure. I mean, the other banks didn't look all that great. Let me just see one thing. And hopefully it doesn't take a half hour to load, but wow. Wow. Huh. Very interesting. Hold on. Give me the fib. Check this. Huh. Interesting. Ready? Interesting. Dang. So my model would complete up here at 178. Dang, Capital One, man. Making moves. This is a good one, Kevin. Good luck. All right. Oh man, you guys all really just had to drop all these. Now I'm messing with you. I'm messing. If it fits your criteria, can you look at Hive for me? Bitcoin miner. Yeah. So let's do Starbucks really quick. And this is at 112. Okay, and then we'll do Hive. Okay, after Hive, we can look at hey, what's up, Financial Fred? Thanks for popping in, man. Mainstream. Oh, okay. CVNA. CVNA. Okay. Yeah, so I did a Mara and Riot yesterday. If you want to go back and pop in on those, but let's do Starbucks real quick. Let me just go back to the weekly and let's do Starbucks. Not so sure what we got cooking here on Starbucks, but thanks for sharing. Appreciate it, guys. We'll see the final results. I can't see them until after, but 2K would be pretty cool. What else? If you want to watch this back as well, if you missed some of it, it'll be on YouTube. Yikes. That's a big L right here. So this weekly can on Starbucks stinks. Yeah, I think Starbucks is going lower, folks. Sweep 89. Sweep 89 and get Sweep 89, get into a bullish imbalance and discount down here. Right here. Check that. Ready? Bingo. Right there. So that's what I'm thinking on Starbucks, but not all that great right now. Sorry. Yeah, no problem, man. So there's Starbucks. Yeah, I think Starbucks is going lower. That's a terrible loss right there. Loss of that bullish imbalance right here. Okay, so that would be Starbucks. Let's do Hive. I don't know. I don't think I've ever charted this one. I've heard of it before. People used to talk about this one a lot. Disrespected. That one is invalid. Yep, you got it. For now. Yeah, it's Starbucks. That was a terrible fade this past week. Okay, so this, let's see if it's more like Mara or more like, okay, we took out the higher time frame liquidity there. Sweep, okay. And, so we ran into this bearish order block right here. Up close candle followed by a down close candle here. Let's just map this range because we did take that low. Ready? Oh, it's under $5. Shoot. Yeah, I avoid these. I don't even like talking about them. So yeah, I wonder. Let's do this. Let's look at the daily. Let's see if we do have the bearish order blocks back to back. Bing, bing. But let's see if we can get a daily imbalance, because this is a bearish structure right here. It's late to the party. Late to the party. So 275 would be the low. That's ugly. That stinks. Yeah, this one is closer to Riot than Mara for me. So we'll see. All right, let's see. What do we got? We got one more. So that's Hive. Where are we over here? All right, so 116. All right, Carvana, the last one. Let's see if Carvana got into that discount that I wanted to see last time around. Yeah, it's weird. Mara looks so much better than all the other miners for whatever reason. All right, let's see. Come on, let's load up. It's taking forever. I can't wait to just have a computer that an hour and a half into a stream, you just click the buttons and it'll automatically bring you to where you want to go. Ooh. Okay, so this was for that run up. This alert here. So disregard that for just a second. Well, wait. That would be prime, but I don't know if we're gonna get that or not. Let's see. All right, come on. Okay, good. Here we go. This is what we needed. We needed this. Bang, 50% retracement. Right here. Check that. Okay. You're low. That started the price run that took out these highs. Also created a bullish breaker. Look where we closed. Come on. Look at this. Look. It's just a beautiful thing. Yeah, I think Carvana goes higher. We got our 50% discount retracement. Realistically, below that imbalance right here at 42. So really not all that much risk. $4 risk, $12 reward, or I'm sorry, more than 12. $16 reward. Yeah, Carvana looks solid. Look at that. When things like that happen, I'm just like, damn, all right, that's crazy. Lines up pretty well. So yeah, it's beautiful. But all right, I'm getting off. I'm gonna eat, watch the rest of this Knicks game, and I'll check everybody. Thanks for joining up, and we'll talk soon.